So, good evening, everyone, and welcome to today's session of Saturday Talk. We are privileged to have Mr. Satish Betadpur. Profession or qualification is a CAPA. After doing his mechanical engineering from Bangalore University, his MBA in investments, and in his professional careers, he has been working with TIA for 14 years as a managing director. In his 14 eventful and extremely successful years, navigating the Asian financial crisis, internet bubble, and 9/11. He has also worked as a CEO, Global Research Director with Independent International Investment Research PLC Group. Apart from that, and he is also a mentor of SIGN, that's IIT Bombay. That is where, as a genuine, we got in touch with Sir, and Sir has been with since its inception, we can say. And with his expertise in the subject, today is going to talk about the acceptance of rupee over the dollar in international trade. Sir, over to you from here.
So let's start with the topic that's kind of in the news of late. In March, I think RBI announced that 10 countries that willing and they're going to be allowed to trade in rupee for bilateral trade. So that, I think, triggered a lot of excitement in the markets and in India, saying that, okay, we are now placing dollar as a currency in will trade. Now, as with everything, there's a lot of extreme hype in that. So we need to kind of be realistic about what is it that is happening there and why are we so excited about a statement like that. So now step back a little bit and look at globally what happens, right? Trade is import-export, as we all know. And from Indus Valley times, there's been trade. And in the historical, those days of Mesopotamia and Indus Valley, we used to barter. We'd like send whatever we make and we got what we wanted from them. So that happened, and that used to happen for the longest centuries. That was what was happening. In 1913, there was a movement to kind of like bring gold as an intermediary for trade. So instead of currencies, there was gold. Then in 1944, Bretton Woods system came into place where there were different currencies, mainly Western currencies. They got together and said, look, let's make our currencies interchangeable, but at the same time, link the interchangeable amongst each other and to the dollar, but mainly keep the dollar pegged to the gold. So every dollar was equivalent to an ounce of gold, which was then priced at $35 an ounce. So there was a peg system in place at that time, meaning, it's pegged to the dollar. Then in the 70s, that peg broke because US started printing a lot of money because they needed to fund the Vietnam War. There was the oil shock. So what happened? The peg had to be broken. There wasn't enough dollars to back the amount of dollars that was getting printed. There wasn't enough gold, to back the amount of dollars that was getting printed. So then that Bretton Woods system failed ended around 70s. And after that, the system that we have currently is in place where every currency trades against each other, and the value of each currency against another currency is dependent on the economic differences between the two countries. So a rupee versus dollar is not managed in most instances. It is equivalent at current rates at 82 and 82 and a half. Is a differential between what our economy is versus what the US economy is. At one point when we were independent, it was at parity, and it's over time it's gone to the current levels it is. So that's historically how the currencies have moved. And right now, dollar trades against euro at a certain level. It was at parity. Now euro is a little ahead at $1.10 per euro. Japanese yen also is an actively traded currency that kind of moves around. Now, I had sent a slide. I don't know if you guys have it or if you can kind of see that. It shows dollar trading against various currencies. Now, dollar as a currency, it trades the maximum in an international trade, meaning that it is head and shoulder above all other currencies when it comes to trade. Now, trade, why is the US dominance? I mean, it's dominant in funding, meaning whenever we go to borrow money, we borrow, we can borrow locally in rupees, or if you want to do a foreign currency loan, we generally do borrow in dollars. So you hear about various companies in India borrowing in dollars. So that it's a currency where people kind of like to borrow in. Transactions happen mostly in dollars. Oil always trades in dollars. We'll get to Russia in a bit. So it's priced in dollars. It's traded in dollars. Payments globally happen in dollars. So whatever import export is there, you kind of generally price it in dollars. So and forex reserves that countries keep. So if you have excess capital because of your trade, your deficits, or your like India has about $600 billion of reserves, which you have collected over time because of remittances that you've had and stuff. So that's money that's coming into the country. What do you do with it? You have to keep it somewhere. And RBI generally buys dollars. I mean, it has diversified into other currencies also. But it mainly buys US Treasuries. You can buy US Treasuries because there's a yield to it. They also buy Japanese yen, some euros. There's a basket, but that basket is dominated by dollar. And in one of the charts, I said in 2004, the reserves were at 70. Worldwide reserves held in dollars was in 74%. It's now come to below 50%. So other currencies are being used as reserves now, but still dollar is the dominant player there. Now we have to kind of come back and ask, why is it that all of this is happening in dollars? Why is it not happening in other currencies? Now, let's look at China. It's the second largest economy after the US. Is the Chinese currency on track to kind of get anywhere close to the US? Not really. It's at, I think, if US is at 88%, 90% in global trade. By the way, this number should be multiplied by 2 because it's a two-way trade. So, so when we all add up, it adds up to 200%. So if it's US is at 88%, China is around 7%, India is around 1.5%. So in global trade terms, right, US is still a dominant force, even though China is a large economy. It's not its currency is not as prevalent in usage. Now, why is it that even a country like China, why is it its currency not being used globally? Because if I'm trading with China and I have an excess of its currency, yuan, I'll only have to use it in China. No other country will use it, or no other country will accept it, not use it, accept it, right? So if I get, if I export something to China and in return I get yuan instead of dollars, I have a yuan, bunch of yuan in my account, but I don't know what to do with it. I can only buy stuff in China. And if there isn't anything that I can buy in China, then that currency becomes, useless, right? Now, so we have to kind of, therefore, people, even when they do import-export with China, they say, okay, invoice me in dollars and we will settle in dollars. Now, that happens all around the world. What has happened in the last, since March, when we had this rupee trade agreement with 18 countries, we've said, like, okay, if you are exporting from India, or if you're buying stuff from, or rather importing from India, these 18 countries, including Russia, Seychelles, Sri Lanka, etc., they can pay us back. They can do the transaction in rupee, meaning we don't need to convert stuff into dollar. So if there's excess of rupees, they can, if they sent us a lot of goods, they have a lot of rupees in India, they can buy stuff in India, and then the settlement can happen in rupee. So that's what's happening with these 18 countries. Now, how much of those trades will happen in rupees among these 18 countries is not sure. Not every trade that happens with these countries will be in rupees. It will be some part of it. Like just taking a look at Russia, for example, now where it's, they can't trade in dollars because of various sanctions that are put on it. If they have to, if they're selling us oil, we are buying their oil. Now we can't pay them in dollars. Russians would want dollars, but they're banned from taking dollars, and we are banned from paying them in dollars. So we pay them in rupees. And so all of these rupees go into a Russian account held in some bank in India, close to $35 billion equivalent in rupees, sitting in an Indian bank. Now, it's safe, it's in rupees, it's earning interest, but how will the Russians utilize this $35 billion worth of rupees? That's very difficult for the Russians, because what do they buy for $35 billion from India? Okay, they can buy tea, they can buy iron ore, some commodities that we may be having. We are not a manufacturing powerhouse. We don't, we don't really have that much stuff to sell them. It's mostly commodities, agricultural products, etc. So the Russians now are like saying, look, we need to stop this oil business, because yes, you Indians are buying a lot of oils, and we are very happy that the Indians are buying. But I'm getting, what am I getting back? I'm getting a lot of rupees, which I can't use. The Russians are saying, look, I need to buy arms for my war in Ukraine. I need to feed my people. Okay, for that, I can get some food items from India. But most of my money I need for other industrial uses to kind of run this war for however long they want to do this. So it becomes tricky, and then we can't buy their planes and whatever war planes, etc., which they're selling, because they don't have any of them to sell right now. And even if we buy it, then again, there's no dollar constraint comes into play, right? So we are buying a lot from Russia, and they're getting a lot of rupees. They don't know what to do with the rupees, and that can be a problem with many countries. All right. So as long as India is like, whatever, $2 trillion, $3 trillion economy, we really don't have a lot of stuff to sell to the rest of the world. So the rupee trade can only work against countries like Sri Lanka, where they're desperate to get some food. And we get whatever we get from Sri Lanka. Maybe we get some tea and other commodities. So, relatively the trade is, maybe less than $1 billion a year. That can be managed in these rupee barter kind of agreement, right? It literally is a barter kind of situation, but instead of literally bartering, you have a currency, a rupee currency in the middle. But when it gets kind of like lopsided as it has gotten with Russia, with $35 billion, it becomes difficult. It is no longer feasible to do all of these trades in rupee terms. They want dollars. Well, in this instance, we can't give them dollars. So, so the current stalemate kind of stands. So smaller economies like Iran, where again they have no access to dollars, we can do this barter thing going on there with the rupees. So that's fine. So this rupee trade is kind of limited in scope. You can only do that if we have sufficient amount of goods that we can sell to the other party. And we buy and sell if they're equivalent amounts, then this works. If it's lopsided, this whole thing collapses, and we are seeing that with Russia already. So that's where we are with the rupee trade. Now, we've started on this journey. Let's look at it 5 years ahead or 10 years ahead, when our economy probably is bigger. At that point, more countries will trade with us in rupee, and we don't need to do the dollar exchange. But at the same time, dollar's dominance is not going to go away. People will still want dollars, because that gives them maximum flexibility. So if I sell you something and you give me money in dollars, if I get dollars back, I can utilize it to buy anything around the world, because dollar is acceptable everywhere in the world. Rupee isn't. So you would, many vendors, when they're selling in, and they would want a currency that is more acceptable all around the world. Dollar is one, euro is the second largest, yen is the third largest. These are freely convertible currencies, so you can easily exchange these currencies in world markets, etc. Rupee isn't. So we have that problem, but let's assume as the country grows, as the economy grows, we'll have more things to sell. Rupee becomes more acceptable worldwide, just like the way yuan has. It's also gone from like almost 1% to like a little higher now, and it continues to grow because they can, I can exchange goods in yuan in China, because they make so much, so that trade is can happen in that currency. So and then the other question comes in is, why dollar? Why not somebody else? It's the faith that people have in dollar versus the faith that they have in euro, for example. They prefer dollar because dollar's value has generally appreciated. If I've held dollars over the last century, um, I've done well against most currencies. It's held its value. It's appreciated. I can buy more with the dollars today than I could have in the past, barring one or two currencies here or there. But generally, the dollar has held its value. And then I also know that the institutions in the US, whether it's the election system, the way they elect, the Federal Reserve, the Treasury, all of them are kind of transparent. Then we know that there will not be major changes in the way they do their work, or even if they do change, it's transparent, so we know how to kind of deal with it. Euro, on the other hand, is a bureaucracy that is run by 28 countries. And it's much more difficult to handle that. And Japanese yen it's a smaller economy. It's not the same size as the US or even in Euro. And China is a one-man show. Nobody would trust them in the current system, because it runs on the whims and fancies of one person or one party. And in this case, it's one person. So given all of that, dollar's dominance in world trade, funding, and a reserve currency, all of that will in the foreseeable future is here to stay. So that part I think is quite certain. India's rupee trade will continue to increase over time amongst various smaller economies, or even against larger economies in small parts. And so that's, I think overall, that's how we'll have this going forward. Now, whether I think that's I'll leave it at that, because I don't know where you guys want to take this further. So I'll wait for questions, and then I can answer it to the direction that you guys want to take it. So I've rambled along for 20 minutes, so I'll take a break now and take questions.
Hello, sir.
Yes.
I have a fundamental question. Like, okay, we say that the dollar is appreciating, which means that the conversion ratio is increasing with respect to dollar to rupee or any other currency, right? And fundamentally, why it should appreciate? I know it's due to the demand, actually. If the dollar demand is high, then it appreciates. Is it so? Is it very simple like that, or some other factors are there?
Okay. There are three factors, right? And this is economics, right? So I'm just going a little bit into economics. There's interest rate differentials. So if inflation, interest rates, and supply demand are three reasons why a currency moves the way it does, right? So if you are a very inflationary country, if you are running very high inflation in your country, your currency will depreciate. So if prices of your goods keep going up, right, for whatever reason, because you are running very high inflation, that means your currency will depreciate. Now, offsetting that is interest rate differentials, where if your real interest rate is high, real interest rate is the interest rate minus whatever interest rate you see minus the inflation rate. So let's assume India's interest rate is now 10-year Treasury, Indian bond is 7.5. I'm just making up round numbers, and inflation is at 6. Our real interest rate is 1.5, okay, 1.5%. If that is higher than real interest rate is higher than other countries, people will put money into the Indian bond market. So there is more demand for our local currency. So that offsets this, that's a positive, right? So there's real interest rates, there is supply, and that increases supply. That's also working with the supply demand. And then there is inflation that erodes away the value of your currency. So usually in India and the rest of the world, it's always been inflationary effects that have eroded the value of their currencies. So that's always, one of the main reasons why our currency, for example, has gone from parity to 82 today. So, and whenever we've had bouts of high inflation, this, the value of the rupee kind of depreciates more.
So I can understand in this way. Okay, if inflation is high in our country, then the investments coming in from other countries, foreign investments, will be a short-term effect because people will like to put it in bonds because inflation is high. But in the long term, it will be causing damage to our currency. That's what I can understand, right?
When we have a high inflation, right, it's kind of people will not put money into this. Any country with high inflation is considered negative. You know why? Because high inflation means that you will have negative real rates. With negative real rates, there will not be any investments that will be happening in the country. So let's take a simple example. Let's say our inflation is at 10% and the bond is at 8%. So you have a negative 2% real interest rate. Now businesses have to keep increasing prices at 10% per year because inflation is that much. But if in most of these cases, when there is high inflation, income levels don't go up as much. So the demand collapses. So high inflation is actually economically a very bad situation because your demand will collapse, and there will not be any investments either. So that's the way you should look at at inflation. Therefore, there won't be any demand for your currency because there's no money coming in, but nobody wants to invest in your country. Look at Zimbabwe, for example, which has hyperinflation, or even Sri Lanka, which has high inflation, or Pakistan. You would think that the currency has depreciated a lot, therefore a dollar buys a lot more, and therefore I should be, my expats should be putting more money in into investments, right? I mean, in theory, that looks, or my NRIs should be putting more money into India. In theory, that's the way it should be. But there is a cutoff at which point, people will just say, look, economy is not stable. I'm not sure where we are headed. Whether the rupee will stabilize in Pakistan, for example, at 280, or whether it will go to 350. If I have that uncertainty, investors will not put any money in. So, country just suffers.
Okay. A related question. This US interest rate is now 15%. That inflation is 15%, much higher than India. But still it continues to increase. It's...
Okay, no. One first is, no, it's not that. So what happened in the US, I'll just give you a little bit of COVID hit. And then when COVID hit, the US government decided that to stabilize their economy, they gave around, round numbers, I'm throwing this around, $10,000 per person free money, literally, right? In 3 tranches. That added inflation, humongous inflation. It didn't go to 15, I don't think, but may have touched for a short period. But inflation picked up dramatically because what did people do? They took that 10,000 and then they said, okay, I have this free money, let me go buy cars. Let me go buy X, Y, Z, whatever it is. At one point, there was no cars available for sale. And all prices of every item went up. So this is what happens when free money is given. Inflation shoots up. Now, the good thing about the US, if that had happened in India, our currency would have been like Pakistan and gone to whatever, 200, whatever. The good thing about US is they are what we call a reserve currency, which means everybody, like I was saying, all the forex reserves are held in dollars. So even though they were running very high inflation, there was no other choice for countries to hold on to some currency. They all went to holding on to US dollar only. So what that meant was US was able to print a lot of currency. When you give free money like that, what does that mean? You're just printing money and giving it to everybody. Now that's you're kind of basically borrowing money, right? So that who was lender for all of this? It was the rest of the world. The central banks of the rest of the world, or anybody who had free money, held on to the dollar, in spite of the fact that economically you should have seen a weaker dollar. But since there was no other choice at that point, the dollar stayed strong. Dollar has stayed strong in spite of the fact that there was high inflation. Other side of the coin is the Federal Reserve, the treasuries, and the country's leaders all quickly realized that this was an unsustainable situation. And especially the Federal Reserve said, look, we cannot have this. And therefore, they wanted to come back to their target, which is 2% inflation year on year. India has a target around 4 to 6%. US has a target around 2%. But right now, the last print that came in a couple of days ago was at 4.5% was where US inflation is running. So it had gone up substantially higher. They brought it down to 4.5. And how do they bring it down? They're increasing interest rates in the US. So so the US interest rates during COVID was 0%. Now it's 4.75%. It's expected to go to 5 next in July. And therefore forcing people to pay more for their borrowings, so that there'll be less demand for borrowing, and therefore the economy cools down, which means that inflation comes down. That's what the US is doing. They have the advantage, being a reserve currency, that nothing happens to their currency. Their currency has stayed the same. It's kind of very unique situation for the US. The rest of the world, would have ended up like Pakistan or Sri Lanka or wherever. The currency would have been like all over like 2x where it is. So you have to look at US in a separate way than the rest of the world.
Understood.
Thank you all for listening, and catch up again some other time. Okay. Bye.